Let's talk about dividend stocks. What are my top dividend stocks for 2022? Now, I know we're already in the month of April, but the reason why I'm bringing this up is because it's very important to start talking about dividend stocks because so much of what has made investors money over the last 10 years is starting to come into question. You have inflation that's going through the roof, so you can't just sit in cash. You have the Federal Reserve trying to hike interest rates as fast as they can in order to combat that. And growth in tech plays seem to be completely dead in the water. So where are we supposed to put our money at? In this video, I'm going to give you my top dividend stocks for 2022. Now, a quick note about dividend stocks. Just because they're paying a good dividend or a stable dividend doesn't mean that the company can't experience volatility. It doesn't mean that it can't go much lower than where you get in at. And just because they're paying a dividend doesn't mean that they won't eventually cut it when times get bad. In fact, some of the worst recessions that we've seen, we have seen a lot of companies cut their dividends. So when it comes to dividend stocks, I'm really looking for the most reputable companies that are paying really solid dividends on a quarterly basis. Sometimes they're a monthly basis, but for the most part, your dividend stocks like to pay them out on a quarterly basis. Now, there's a lot of dividend stocks that I'd like to be in right now, but they've gone up so much over the last 10 years, it makes sense to wait for them to come back some. But there's still 5 of them that I really like. If you're looking at getting into a dividend play that has an earnings release coming out, you may be best to wait for that to pass before jumping into it. So without further ado, let's talk about my first top dividend stock for 2022. Verizon. Verizon has a 4.76% dividend. It pays it out quarterly, and look at this. It's not a flashy stock by any means. In fact, it really hasn't gone anywhere in years. However, if you're looking for stability and you're looking somewhere to park your money, a 4.76% dividend is a pretty solid dividend to get your hands on. In fact, from a technical standpoint, because I always like to focus on the technicals, even if we're talking about dividends, this stock is right on the cusp of actually breaking this declining trend line off of the December highs of 2020. And if it breaks out above that and it can get back above 55, there's room to actually run right back up to 57, maybe even $60 per share. And if you can get those kinds of gains on a dividend paying company like this, it makes it all the better of an investment. Again, I'm not looking to get in Verizon because I think there's this incredible story where it's going to go from $53 to $200 a share. Or as the GameStop traders like to say, it's going to go to the moon and orbit Mars. It's not going to do that. But it is a solid 5G play. And despite some very tumultuous times in the market, it has held its own very, very well. Now, the number 2 dividend play for 2022 is Altria. Stock symbol MO. Look at this baby. This one sets up beautiful technically, guys. And it has a 6.55% divvy. From a long-term standpoint, massive inverse head and shoulders pattern that it is currently breaking out of. Here you have your left shoulder, you have your head, and then you have your right shoulder, and it's breaking out of it. And you can see it's reversing a downtrend going all the way back to 2017 with new higher lows and higher highs. So a really good trade setup here and dividend play going forward. Again, like Verizon, I don't expect this one to blow the roof off, okay? But going back over the years, it has held its own quite well. And from a technical standpoint, you gotta love that inverse head and shoulders pattern that is now breaking out. And what would a good dividend play be without something from the utilities? This next one has a 6.64% dividend, and it's none other than DMP, Duff & Phelps Utilities Income. Check out this one from a technical standpoint too. Nice looking bull flag pattern, and it's on the cusp of being able to break out of this pattern. But besides that, we have a series of higher highs and higher lows going all the way back to early 2021. However, considering how much it's run over the past year, you may actually be able to get in at even a better level if you let it pull back some, because the utilities have been very, very hot lately. And as it goes with a lot of dividend plays, patience pays, because the lower you can get in on the stock, the better off your dividend yield is going to be. So on something like DMP, it could really make a huge difference if you let it pull back to under $11 per share before getting in. But utilities are notorious for weathering bad markets far better than like tech or discretionary or healthcare or a lot of these other high growth sectors that tend to get trampled on when the market starts to sell off. Now, my fourth top dividend stock for 2022 is Unilever. Unilever has a 4.49% dividend. And again, it's a staple company. And if you're starting to see a trend here, you have staples, you have utilities, you have communications. These are all sectors that are more of your safe sectors that don't do as bad in a market recession. Now, Unilever has actually been taking a beating over the past year. You can see it's at the lower end of a trading range going back all the way to 2017. And if we go back to the weekly chart, you can see it even better. That, despite trading at 64, it is now trading down to 44, which makes for a good candidate to start slowly building a position in. Because yes, if the market continues to sell off like what we've seen for much of 2022 so far, it could take Unilever even lower than what it's already seen. And if it does that, you may have even better prices to get in at, and maybe that dividend yield can increase to like 5 or 6% as a result of just being patient. For me, the ideal place if I could start building a position would be if I could get in around $39. So it's about another 10% to the downside, but there's a strong support level there. If it can hold that support level and start to bounce, that's where I really want to start adding a lot of shares to my portfolio for a dividend that will be closer to 5%. Now, for my last one, it's a little bit more of a riskier play. It's a REIT with a 5.17% dividend. Now, I'm not a huge fan of REITs, but they can also be a really nice addition to a portfolio as long as you don't go overboard with them. This one is Store Capital. And like I said, 5.17% dividend. You can see that it has a little bit of a topping pattern here, and it's broken through it in key support levels at around 33. But let's say that even though it's been basing for the better part of a month or two, let's say it does break the support level. Where would be the next levels of support that we would want to watch for potential entries? First of all, I would probably say about 25 would be my next level. And if it gets really bad in the economy, I would probably start targeting 21 and then ultimately the COVID lows all the way down to 14. This would be a big drop, but it would also represent a huge opportunity as long as they don't cut the dividend to get in on a REIT with an incredible dividend yield. So here's the thing. There's a lot of other stocks that I really like from a dividend standpoint, but they've run up so much over the past couple of years, especially since the March 2020 bottom, that they're not that attractive to me anymore. For instance, last year, I bought into some CVX at around 80. I had no idea that this thing was going to go up over 100% and that we'd have oil exploding over $130 a barrel. Yet it did. I actually booked the profits on it, and I'm waiting for it to come back down again because ultimately oil will cool off. And when it does, I want to be able to get some CVX on the cheap. Right now, it has like a 3.3% dividend. But if I could get it to come back down, maybe it has a 30 or a 40% retrace, then you're starting to look more at like a 4 to 5% dividend, which makes it a lot more attractive. Others would be like Walmart, Home Depot, Costco, McDonald's, Anheuser-Busch, BUD, and NextEra Energy. The problem with all of them is that a lot of these only have like 1 or 2% dividends right now, or even less. And with inflation, that's just not going to cut it. So with the stock market struggling so much against the backdrop of a Federal Reserve doing quantitative tapering and raising interest rates, it helps to be very, very patient with these dividend plays, even with the top 5 that I even mentioned, because what's cheap today may become even cheaper tomorrow. Now, right now, I have some Verizon, I have some Altria, and I have some DNP, but I'm still looking for some good opportunities in STOR and Unilever, UL. And if some of those other names that I told you about come down some due to a bigger market correction, then I want to jump on some of those names as well. Plus, if you don't like Verizon, well, then you have AT&T that has a slightly higher dividend. If you don't like Altria, stock symbol MO, you have Philip Morris, stock symbol PM. So there's alternatives to some of these plays too worth checking out as well. If you enjoyed this video, tell me which stocks do you like best as your top dividend plays for 2022. I want to hear which ones that have done you the best over the years. And if you have any questions about this video, also post those in the comments section as well. And make sure to click the join button so that you can get all my stock market research each and every day, which includes my daily setups that I'm following and my weekly watch list updates, plus updates on all the indices and all the FANG stocks. So check that out. Make sure to like, make sure to subscribe. Thank you guys, and God bless.